basically, we have a break right here, and we do have a nice little trend line break right here. Okay. Now, once it breaks this right here, I do want price to come back here. Let's say that, let's go to the 1 minute, and let's see, if price actually showed us anything around there. Okay, so, alright, I do see a reason to get in. I'm going to show you guys that later. Okay, so, right here, we had that trend line break, right? Now, when it comes to this strategy, me personally, okay, I like the market to come deep into the level. Okay, so notice how we have this right here, okay, the high right here, and we have this low right here. Okay, me personally, I like for price to come back almost to the last candle. Okay, now this is a small candle, so price will probably never come back to this candle. So I don't care about price touching the candle. We don't have to touch the candle. Okay, the last candle from the swing high right here. As long as it comes very close to it. So what I would do is, if I was looking at this, I would either get in right here. That's close enough. Okay, or maybe this big candle right here. I would get in right there. Okay, because the reason why I want to get in deep is because I get a better risk to reward. Okay, that's just me. So you have to understand, that's the way I'm looking at this. Again, this strategy is very flexible, so you don't have to do that if you want to get in early, because sometimes price will never get that deep. So that's why me personally, I trade multiple markets, because sometimes the one market that I'm looking at, price will probably never go that deep, and I might miss a move, whatever the case is. But if I'm looking at multiple markets, I don't care, because I know usually one market is going to come, prices are going to come very close to that level, and I'm going to get a good trade out of that. Okay, so when we have this nice break from this trend line right here, a lot of times price will never reach this level right here. It will probably go to the swing high right here and go straight back down. So keep that in mind. It's up to you. If you want to get in early, it's up to you. Okay, I'm just telling you what I like to do. I like to go deep in the level, so I get a decent risk to reward, because I have my stop maybe up above here, and now my stop is a little bit smaller now, and I can risk a little bit more, and I have a better risk to reward. Okay, so that is one way to get in the market. Okay, I'm showing you guys how to get in the market. So as soon as price breaks here, when it pulls back to the breakout of the trend line, I want to get in somewhere around this area right here. Right? So that's one way to get in. Next way to get in, guys, is a 1 minute correction. The 1 minute actually shows you better corrections than the 4 minute or the 5 minute. Okay, so let me show you guys that real quick. So right here, guys, what we have here is a nice breakout right here. Okay, lovely breakout. On the 4 minute, the market shot down. It came back to the breakout. Okay, like I said before, the reason why I like these breakouts is because you will have supply, zones or demand zones, from these breakouts. Came back to supply right here, and let's go to the 1 minute chart. So another way to get in, guys, is basically corrections. Okay, a correction is basically, so let me show you guys an example. So let's say that the market is going down. Oops, right here. So the market's going down right here, and the market is going up, but it's barely going up. It's just chopping up like that. And a lot of times with these corrections, the way I like to use them is I like to draw a trend line the opposite way. Okay, so when it's going up, a lot of times you will see the market connect to these highs right here. So let me show you guys this example right here. Okay, so notice how we have connections right here. You see how the market is connecting to this high? That's how you can actually really tell it's a correction. Okay, and it hit this low right here. Okay, where the breakout happened. So as soon as it hit that breakout, me personally, I would be in a move. Okay, the only reason why is because, number one, it's pretty much a deep pullback, and I can tell this is a correction. So as soon as it hit that, most likely price can actually go down and keep going. So what I would do is, if I got in this move, I'll probably put my stop loss above here. Okay, now another way I get in the market is another correction called a wedge. Now a wedge is basically, you have to get used to looking at wedges, okay, because it's pretty much the same thing, but it's pointy at the end. So you have Okay, guys, so here's a nice little wedge right here. Okay, a lot of times these wedges you probably only get, one connection at the bottom and a lot of connections at the top, but basically it's usually pointy at the end. Notice how it's wide right here, and then the lines get pointy at the top, and you're looking for that break. Okay, so this is another correction that you can actually use when the market is basically in an uptrend or a downtrend at these key levels, right? All the market is doing every single day is basically creating impulses and corrections. So basically is going up, impulse, correction, impulse, correction. That's pretty much what the market is doing every single day, right? So we got to take advantage of these impulses right here, right? So let's go to the next way to get in, and it would be when the market can't close. So notice we have a break right here, okay? And I told you guys I was going to show you why I would get in that move. Now remember, we have this break right here, and it never came back to the breakout, but I did see some on the 1 minute chart. Let me show you. Okay, so what I do see, guys, is this right here, okay, this swing high right here, we can't close above it, okay? Notice how this candle right here can't close above this swing high. I will get in, okay? Because this is, the risk reward on this is pretty good. I mean, you're risking one candle to make, maybe 3 candles or 4 candles, okay? So that's another way. If price never gets back to the breakout, but it comes close to the breakout or try to come to the breakout, can't close above this swing high, I'm getting in with the 1 minute chart, because that is the risk reward on those is pretty good, okay? Let me show you guys one more example. Okay, so guys, we have, pretty much a trend line break right here. Price tries to come back to that trend line break. It didn't, and let's go back to the 1 minute chart to show you guys what I see. Okay, so basically what I see is this swing high right here. Notice how this candle right here couldn't close above the swing high. This next candle right here, you risk this one candle, all right? And basically you're looking for close to the lows, right? So this is another way to get in. This is a nice risk to reward. Once you get these type of moves right here, it'll definitely give you a decent risk to reward to the upside, right? So that's another way to get in, and let me show you guys the last way to get in. Now the last way to get in, guys, is basically a breakout before the trend line break. So let's say that we have the market going up right here, okay? A lot of times the market will basically hit this trend line right here and consolidate, right? And then next thing you know, it will break out of this consolidation. So we can actually get in right here before the trend line break, okay? Especially if everything is lining up, you get in right here before that trend line break. So that's one way to use a breakout, a nice tight breakout. Or another way you can get in is if the market breaks it, right? And then you would start to see the market consolidate a little bit, okay? And then you can actually get in right here. So those are two ways. You can either get in right at the trend line. Sometimes it will consolidate right at the trend line and get in. Or sometimes it will break it a little bit and then consolidate and then you can actually get in. So let me show you guys some examples on the chart. So right here, guys, we have a nice little trend line break. But before, the market's going down, so it's trending down. Before we broke this trend line, guys, notice how we have this nice little consolidation going on right here. We can get in right here, okay? Before market even breaks out, we get in right here because it's telling us that, it is basically weak. It can't go up no more. And if it breaks this consolidation, we can just get in right now, right? So that's one way to get in. So let me show you guys the next way. Next way to get in is, let's say the market breaks. Okay, remember, when it breaks, I'm looking for the market to pull back, maybe to somewhere around here, okay? And look how the market is consolidating right here, okay? This is a beauty right here because if the market comes back to this right here, it's a strong possibility the market will hold this price. Because look how it's chopping up right here. There's a lot of orders right here. Smart money basically was stacking a lot of orders right here. Okay, getting in the market, and then boom, they basically drop the market down. So when it comes back to this area, it's a strong possibility. Okay, especially when you see consolidation like this, strong possibility that this price might hold. Okay, and price will go back down. But price didn't go back to here. But what do we see? It broke this trend line. And it starts to consolidate, okay? So I would actually take this breakout right here, okay? So that's the next way to get in. Okay, so those are the setups I'm gonna show you guys some extra setups. Now these setups are the same, but this is when smart money decides to manipulate the market and stop a couple of people out. So let's go to those setups right now. So you have to be familiar with these stop outs, these smart money stop outs. Say you took this breakout right here. Sometimes it goes a little bit more than that. It says it came back and stop you out, right? A lot of times, if it doesn't go that far, right? Notice how it stopped you out and it shot right back up. What you can do is basically re-enter, right? Or you can look at these and play them by itself. Let's say you just woke up and you see this right here. Well, you can say, oh man, they just stopped somebody out. So that means that, man, this is a high quality trade. So what I would do, I would redraw my trend line to this right here, to this. So as soon as it breaks this, right? A lot of times, if it breaks the trend line, I just go for that, like the recent high. So right here, this is the recent swing high right here. So I'll probably wait for it to go break the swing high. But this is a high quality trade, because if it stops someone out and shoot right back up, that means that smart money was playing games. All right. So understand these smart money manipulation going on. So you notice right here, a breakout, smack, the stops right here, and it went right back up. Okay. So if you understand these, you can catch, they don't happen every single day, but when you see these are high quality trades right here. Let me show you another example of a smart money manipulation going on. All right, here's another one. Now, this is before the break. So this is before the market breaks out. So the last one I showed you is actually when the market breaks out and pulls back. This one actually is before the breakout. So it will stop a couple of people out right here. Notice how the market stopped this guy out right here, and it couldn't close. So the ones I like, the ones I really like, are the ones that can't close, because if it can't close, that means that the market is so strong it can't even close below that candle. Okay, so that means that there's a lot of buying power right here. So they stopped this person out right here, and they couldn't close below this candle, and then you had this nice breakout right here. Okay, and this is only for consolidation. I showed you guys stop outs on candlesticks during the course. So I'm just showing you guys consolidation right now. And another thing right here, you see how this bar right here can't close above this high, and it breaks this trend line. These are lovely trades. These are high quality trades too, right? They're stopping people out right here, and they can't close above this high right here, and it breaks this trend line. Very, very good trade. Okay, so those are the patterns that you are going to use, okay, when it comes to consolidation breaks. All right, you will find these patterns on a 1-minute chart, 5-minute chart, 15-minute chart. It doesn't matter what chart you are looking at, you will find these patterns on those charts. All right, so what we're going to do now is going to go to the next video, and we're going to put everything together.